outlook. Firstly, to all my subscribers and the attendees of this call, wish you a very happy new year. And this is going to be the first LNG shipping market outlook for 2026. I'm Aman, the Senior Manager for Gas Shipping at Drewry Maritime Research. And for today's webinar, I will be joined by Pratiksha Negi, Lead Analyst for LNG Shipping at DMR, and Shivam Sharma, Research Analyst ESG at Drewry Maritime Research as well. So in today's webinar, we are going to be covering about the LNG market, the shipping market, uh, what happened in 2025. There's going to be a recap. What can we expect for 2026? And then the fleet development fundamentals. As from our latest forecaster, the theme was that the recovery is in sight, but trade recalibration and geopolitics is going to be dictating the pace of that recovery. So the webinar is going to be of 30 minutes, where we are going to be speaking for 20 minutes, and it is going to be followed by a question and answer round. So at any point, if you have any doubts or queries, please feel free to put in your questions in the chat box provided, and we will try our best to answer as many as possible. So without further ado, let us start with the presentation, and allow me to give you a recap of 2025. Now, this was a very volatile year where the TC rates went to their 5-year low. It was muddled with many downside risks. It included the ample vessel availability, lower Asian demand, the mild weathers in Europe and in Asia altogether, and several trade uncertainties that were caused by trade frictions, volatile tariffs, and geopolitical hindrances. Now, these all together weighed against the positives in the year, which came in the form of higher European imports, increased global LNG supply, and record high LNGC scrappings. Overall, the carrier utilization suffered in 2025 as increased US Europe trade, which came at the cost of the long haul US Asia trade, impacted the total ton mile demand generation, and it led to a vessel surplus forming in the market. There were some improvements. LNG transits in early 2025 via the Panama Canal were increasing, but it was reversed as higher European demand, uh, increasingly being met via US LNG, dominated the trade and attracted all the cargoes to them. So, just to highlight some of the key events of 2025, the year began on a weak note. The rates were record low, and that was mainly because of a mild 2024-25 winter. There were upticks during the second quarter. That was mainly because of the tensions in the Middle East, for which the premiums, the insurance premiums rose. But it did not have a much significant impact on the overall market, and it was short-lived as well. Now, for the third quarter, we did expect the rates to recover, but the recovery did not materialize because of the low LNG demand in Asia, the higher vessel availability in both the basins in that time, and also the LNG prices being on a higher level as some of the projects that we expected to start up or ramp up, those capacities did not materialize. But then the winter arrived in the fourth quarter of 2025, and driven by the heightened LNG demand in Europe, that was attracting a lot more of the modern Negi XDF vessels. The vessel tightening in the Atlantic happened, but in contrast, rates in the Pacific, they failed to increase at the same pace. Asian demand remained subdued, and the weak regional demand kept the US Asia trade lower, as most of the US LNG exports were going towards Europe. Overall, this led to the TC rates going to a 5-year low, with TFD rates averaging at 25,000 per day. They were down 37% year on year. And for the modern XDF Megi, they were averaging at 40,500 per day, down 25%. Now, in 2025, the FID activity was also much active. We saw 63 MTPA of LNG capacity reaching the FIDs, and the supply deal activity was also very strong, with over 80 MTPA of supply deals being signed, mostly with the US, while Qatar was held back with only one deal signed. So this was a basic recap of 2025, and now to take you through of what is going to be expected in 2026 in terms of trade, demand, and supply, we have Pratiksha Negi. So Pratiksha, over to you.
Thanks, Aman. So, for the outlook for 2026, we expect LNG shipping rates to improve. This will be driven by the demand acceleration and the supply expansion. However, a significant rebound is still unlikely as fleet expansion will continue to outpace the liquefaction buildup, and most of the anticipated recovery will be in the second half of 2026. Now, this is highlighted in the 2026 schedule as over 65% of the annual deliveries are expected for the first half, while 60% of the new supply is scheduled in the second half of this year. Now, one would wonder what will lead the recovery in rates if fleet growth continues to outpace the liquefaction buildup. Now, the basis of expected recovery lies in the improving supply-demand fundamentals rather than in random factors. The significant growth in liquefaction capacity will improve the supply, lower prices, and boost demand. The widened gap that we saw between the fleet growth, supply, trade in 2024 and 2025 will narrow in 2026, with demand recovery expected to keep up with the supply expansion. Now, this structural change is likely to support the much awaited recovery in the LNG shipping rates, with over 60 to 70 LNGCs to be added in the fleet, available to cater to the new supply of over 40 MTPA by then. Although the fleet expansion will continue to prevent any major correction in rates, some positives will serve as catalysts in pivoting rates towards a road of recovery. Now, one of the first factors to watch is LNG demand. We project trade growth of 6% in 2026. The growth will be supported by supply improvement, lower prices, rising gas demand, and weather-driven requirements. Now, in Asia, the demand is anticipated to improve, supported by higher gas demand and lower LNG prices. China, whose imports recorded a decline of 14% in 2025, are likely to revive this year, not due to lower pipeline or domestic supply, but because key supply sources have maxed out, which capped the country's imports in 2025. Now, with domestic production already meeting targets for 2025-2026 and pipeline supply via Power of Siberia 1 operating at full capacity, we expect China's growing demand to be met through spot buying, which remained largely subdued in 2025. Meanwhile, new contractual capacities is set to commence in 2026, which will support the demand recovery. Other than China, Taiwan and India will also record high imports supported by new supply deals, the rising share of gas in the energy mix, and improving regas capabilities. The demand outlook is bright for Europe, with robust imports expected this year as the continent is likely to end 2025 and 2026 winter with storage below 30 degrees, which should support demand. Additionally and imperatively, Europe's quest to implement further structural changes to its energy sourcing will be the main driver of imports in 2026. Europe will strive to sail another winter without Russian gas and LNG. Russian gas, and this time it will also have to navigate possible new tension with its most relied upon LNG partner, the US. Although we do not expect any significant reduction in trade between the two, at least in the near term. Overall, trade will grow and the rising demand will be well met by increased supply. Speaking of which, the global LNG supply is on the rise, with the US and Qatar expected to lead the growth in 2026, with the start of mega projects such as Corpus Christi, North Field East, and Golden Pass that are scheduled to come online, adding over 30 MTPA. Now, while 43 MTPA is to be added this year as whole, most of the supplies are expected in the second half of 2026, with only 16 MTPA in the first half of 2026. We foresee a further balancing of supply and demand in the later half of this year, but only to a limited extent, as supply expansion will continue to outpace the demand growth. In terms of overall volume, we project LNG trade to reach 458 million tons in 2026 in our base case. The US will continue its legacy as the largest exporter, supplying over 120 million tons, mostly to Europe, followed by Asia. On the other hand, Qatar's NFE terminal will create new trading opportunities as some of its volume remain uncontracted, providing room for spot trading, especially as Europe could scout for more LNG from alternative suppliers amid ongoing tension with the US and its ambition to further distance itself from Russia.
Thanks, Pratiksha. And while we are talking about global tensions, can we throw some light on some key political, geopolitical scenarios, maybe that could reshape the course for LNG shipping?
Sure, Aman. So geopolitics will remain a key driver for LNG shipping in 2026, with global tensions unlikely to ease anytime soon. Here we have tried to present the key geopolitical events and their likely impact on LNG shipping. The year has already begun with renewed US action in Venezuela and the former's ambition to take over Greenland. While direct impacts on LNG trade seems unlikely, the ripple effect could derail the expected pace of LNG development. Meanwhile, the US-Asia trade war has already intensified the tension between the two, and any military confrontation or economic conflict could trigger a rollback of tariffs, sanctions, and USDR policy. We remain, we maintain a cautious outlook for the LNG trade resuming between the two in the first quarter of 2026. The possibility will only arise when China's demand surges significantly, which we expect towards the end of the second quarter of 2026, or when the tariff war ends. Now, in the Middle East, despite easing tensions in the Red Sea around the late 2025, LNGC transits via this canal, Suez Canal, remain limited. The escalated unrest in Iran and the Houthis' ongoing threat over the Red Sea will keep the transits via Suez, limited or restricted. And if any resumption occurs, it will be a gradual one for LNG carriers, as several ship owners are opting for a wait-and-see approach due to the prolonged tensions in the region. Now, switching to Europe, a resolution between Russia and Ukraine appears to be a difficult one, with Europe considering a full ban on Russian LNG by 2027. But if any negotiation between the two break down, this could shift more US LNG towards Asia, as the continent faces a major geopolitical sprint with the US at present. Although we do not expect Europe's complete pivot from the US, and the continent, it could seek some alternative supplies from other exporters in Africa, Canada, and Qatar.
Well, yes, most definitely. With President Trump's ambition to take over Greenland, that is becoming a point of contention with the European Union, and that also jeopardizes uh, Europe's overall LNG sourcing strategy, which is heavily reliant on
Yes.
US LNG. Apart from trade, do we see that these tensions will have any impact on the LNG project development? Do any projects uh, get some support from these sanctions, or do we see that the development is going to be heavily impacted by these?
Sure. So we have seen how geopolitical weaponization of LNG is prevailing. We saw how tariffs and sanctions have been used to crack supply deals in the past, especially last year. Regulatory easing in the US has definitely, brought back the lost momentum with the FID wave returning in 2025. Despite these tensions, we do expect this pace to continue in 2026, although it will be a crucial year for project development and plant capacities, which have been facing major delays since 2024. Um, Although we are upbeat about FIDs during 2020 from 2026 to 2028, this pace could decelerate thereafter due to a bearish outlook for LNG demand beyond 2035 in key countries that could undermine the economic viabilities of these projects slated post 2030 when we'll already have 800 plus MTP of supply available in the market. So yeah, to answer to your questions, some uncertainty remains, but we are still positive about these FID, wave to continue in 2026.
Thank you, Pratiksha. And also the positive FID outlook that we see between 26 and 28. That would mean that more capacities is going to be coming into the market later on. And that also increases the number of LNG carriers that are going to be required to transport the LNG from these projects. Apart from that, we also have the replacement demand that is going to be rising with the phasing out of the older steam turbine carriers. So on that note, it would be better if we can, just see the LNG fleet development and how it is going. So allow me to take you all through it. So the LNG fleet is expected to expand by 8.5% in 2026, courtesy of high deliveries. We expect over 100 vessels to be delivered in 2026. Now, this is post slippages. Among the 100 vessels are going to be 85 LNGCs, and the delivery schedule is going to be lopsided, with 50 of the LNGCs scheduled to be delivered in the first quarter of 2026. The deliveries for 2027-28, they are also on the higher side. So we will continue to see a large number of modern LNG carriers continue to be delivered into the fleet. Now, coming to the order book and the new orders, the order book has eased as high deliveries continue, but the new ordering was much lower in 2025. Now, this was because of multiple factors. We had much high ordering in 2023-24. In 2025, we also saw the impact of the FID pause under Biden's administration. So that also had an impact. We also saw the USTR regulations make the buying decisions for the ship owners much complex, along with the high new build prices and the scarcity of shipyard berths in South Korea and China. But we are expecting a recovery. It has already started from late 2025, and the trend is going to be continuing in 2026. We expect that the next investment cycle is forming, but this is going to be much more controlled than the last one than we have seen. We do not expect a lot of speculative ordering to take place, but more project linked and long term chartered vessels are going to be appearing on the order book. At the same time, demolitions were at a record high in 2025 with 15 carriers being scrapped, and the trend is going to continue in 2026 as well. We expect around 20 vessels to be scrapped in the year, with the first one already hitting the mark just a couple of days ago. So the phasing out is going to be a very important phase or a transition in this market. And the propulsion technology, the regulations that are going to be driving the market are going to be something that we have to look at it in detail. So now I would like to invite Shivam, who can give us some insights about the LNG propulsion technologies and also a little bit on the demolition criteria. So Shivam, over to you.
Okay, thank you, Aman. So, as we know that the world is surrounding energy carriers is evolving at a very fast pace, and looking at these technologies related to propulsion system is very important, with the prospect of ship owners, charters, and other stakeholders for their future business decisions. The global and regional regulations are also playing a key role in determining what is lying in the future technology that will be changing in the world of LNG. As we can see in the timeline, that there are various technology mentioned over here. So the steam propulsion technology is the oldest one, and it's a cradle technology for LNG propulsion, and it was widely adopted until late 2018. Slow speed diesel relic and tri and dual fuel diesel electric drives joined the market around 2006 and 2007, where slow speed diesel relic being out of the market by 2011, while TFD and DFD still being the part of the race. The Negi and XTF technology kickstarted around 2016 and is growing in the present market, and is a very lucrative option right now for the ship owners. Combined has its appearance for a very short while from 2018 to 2019. The biggest news is that the Mega has started from 2023, but the discontinuation of the Mega engines has led the ship owners to switch over to the XTF engines, which has given a higher market share to WinGD. So overall, seeing this timeline, it suggests that the obsolescence of certain technologies such as combined, slow speed diesel plus relic and steam is already getting in phase. Moving on. The current market situation can be seen by doing the analysis of what's happening during the vessels when they are idling or layups. So for analyzing this, we have three charts. We'll start from the top left. From there, we can see the current idling and laid ups as per the different technologies. So you can see there that the steam turbine is leading the race, where most of the vessels are idle or laid up, reaching to values till 43, and DFD follows with 12 or 13 vessels in the race. And if we see the chart on the top right, we can see a sudden change in the figures of 2025. Before it was maintaining nearby 40, and it suddenly jumps to 60 above, which is showing that there is something happening in the market, and the vessels idle and laid up figures have risen. So we analyze a bit deeper, and we see all the vessels which were built from 2000 to 2024, and we did a benchmarking where we find that the layup per delivery ratio for more than 15% were found from the vessels which were built in the year 2003 to 2008. And most of these vessels were steam vessels, and DFD also slowly starts following up. So it shows clearly that idling and layups are mostly happening in the older steam vessels, and DFD is also sooner joining the race into it. Moving on. So this is a very interesting one. This shows how the market behaved last year during the demolitions. So we can see that demolitions are on the rise. Yeah, and the chart on the top left, you can see that the figures suddenly rise in 2025 to 15, which were before hovering around 4 to 6, which was pretty standard in the market. Similarly, if you see the chart of the top right, you can see a sudden decline or a downward trajectory for the demolition age trend. Before it was suggesting from 38 to 42, 43 being its peak. Right now it has gone to 26. This is a very sudden decrease in the trajectory. And if you see the most bottom chart, which is like expected demolitions against the technology, you can see that the steam is leading the race. However, the DFDs is also getting consideration for demolitions post 2030. So seeing to all those things, we can see that all these developments suggest that there is a direct relevance of the decarbonization framework and operational measures involved in such kind of action. Thank you.
Thank you, Shivam. And let me quickly take you through the key takeaways. So, the global LNG trade is expected to rise in 2026. We projected a rise of 6%, and this will be on the recovery in Asian demand, while Europe will continue with its renewed strength. In terms of global LNG supply, that will increase as well with the start of new LNG projects. Most of the additional capacity is going to be coming from the US and Qatar. In terms of the FID activity, it rebounded in 2025, and the next wave is going to be expected in 2026 with more capacities in the pre-FID phases. For the rates, they are in a recovery phase, but not no significant growth is likely in 2026. The long-term outlook still looks strong on improving supply-demand balance, with more capacities expected to be added in 2028-29. But at the same time, we are seeing a lot more of LNG carriers deliveries that are scheduled over the years. So this is going to be expanding the fleet with the record high deliveries. The ordering will rebound in 2026, while demolitions will also be on the rise. But the orders are going to be much more controlled this time, where speculative ordering is not going to be that prevalent. And most of the orders are going to be backed by long term charters and are going to be project linked. Apart from the LNG carriers ordering in the other segments, FSRUs, FSUs, even small scale LNG carriers, we expect the orders to rise in these segments as well. With newer capacity coming, demand recovering, the LNG prices are also expected to ease. So, overall, that looks like a very positive environment for the development of these vessel-based projects. For LNG bunkering vessels, the ordering momentum was very high in 2025. We expect the same in 2026 as the number of LNG fuel vessels in the overall fleet, they continue to rise, and we expect over 1,000 LNG fueled vessels to be on the water by 2027, which will require near 100 LNG bunkering vessels with that time. So there's going to be a lot of scarcity there and a lot of potential there as well. So that was our presentation. And now I think we have some moments to take some questions. Okay, let me see. Okay, with the ongoing tensions between the US and Europe, which other alternatives could benefit from any row between the two? I think alternative suppliers. And do you think Russian LNG or gas could return to Europe amid intense tensions between the two countries? Uh, Pratiksha, I think
Yeah.
it can be with you. So this is regarding the tensions between
Mhm.
US and Europe.
So for the first part, of course, if tensions escalate between US and Europe, it could go towards other alternatives like Canada, African exporters, and Qatar also, which is going to, bringing new supplies through NFE this year. But again, the sudden, shift from US LNG for Europe will be a difficult one because in 2025 also around 60 to 70% of European LNG needs were met by US LNG. But of course, Europe will continue to diversify its sources, and these three can be the go-to areas where the continent can go. To the second part, of course, the continent is trying to end its reliance on Russian LNG. It has already stopped its gas supplies since last year. Now it's aiming to end the LNG also by 2027. Uh, we do keep a very cautious outlook for this one. Um, in case any negotiation happens, of course, Europe will not completely move towards Russian LNG or Russian gas. Some volumes can come towards the eastern side of the the region, but again, it will be a gradual and a very cautious approach. The complete return of Russian LNG or gas seems unlikely in the near term or in the forecast period.
Thanks, Pratiksha. So the second one, I think this is for Shivam. So the question goes, which propulsion type would be the best one to future-proof your investment? And is methane slippage going to be a factor even after 10 years?
Definitely, Aman. Negi and XDF are two prominent technologies. Negi is from Avalanche, XDF belongs to WinZD. They both are cutthroat fighting the race. XDF is getting a little bit higher value in the market right now, but Avalanche is doing great on the methane slip side. They are developing the engines with the lowest methane slip, and WinZD have a very good aftermeasures also. So it will be very interesting to see in the future how these two technologies will do a peer-to-peer comparison and gain the market share eventually. But there are also certain technology like pre-combustion OCCS, which can be merged with LNG and steam reforming, and we have to still see how the commercial visibility of it will be there and how it will be merged together. So everything is, methane slip and all the other abatement technologies will be very interesting thing to watch in future. So and definitely it will change the market dynamics in the future also. Thanks.
Thanks, Shivam. There's also a second one for you, if you can take this one. Does the global regulations of IMO net zero framework have any effect on LNG as a maritime fuel?
Yes, there has been discussion going around where the asserting the weighted average value of LNG GFI intensity is getting ascertained, and it will be a very big factor for creating a pathway for LNG to be a deciding factor where LNG can be a transition fuel or a fuel in transition. So everything depends upon how this weighted average will come and how the IMO and NZF penalties will be there in case IMO MEPC 83 ES2 in October 2026 will decide. So it will be very interesting to watch what value they will come up with. This is certain things. There are certain things which still need clarification from IMO side, but it will be very interesting to watch what will that value be.
Most definitely, and I'm sure a lot of people are going to be vying for that one when it happens.
Yeah.
So let's just quickly take another one because I think we have run out of time. So you are forecasting 150 plus MTPA of new FIDs between 2026-28. Can you name a few of the projects which you think are the most and least likely to reach FIDs? Pratiksha, I think you can take this one.
Yeah, I'm sure. So we are expecting this much of volumes, at the pre-FID level. Some of the projects that we think are going to get the FID next year or in the later years include the US Commonwealth LNG, Canada's Canada's LNG, which is about 12 MTPA. From Mexico, we are also expecting Amigo LNG, which is again a large scale project. Then Argentina LNG Phase 1 is also weighing for its FID in 2026, and it has a higher chance as it is cracking some deals. Another one from Canada is wood fiber, and there are several from the US like Cameron LNG, Freeport LNG, Deflin LNG, and CP2 Phase 2 LNG. These are the the key. These are the projects that are having a greater chance of securing their FIDs in next and another years. Some of the projects that we think they are weighing for the FID but could face problems like financial problems or regulatory problems are from the countries like Papua Guinea. We are seeing that Papua LNG 2 is facing some hurdles, financial hurdles. It is waiting for its FID for last 2 years, but still, in that phase only. Then another projects are from Mozambique, like Rovuma LNG and Mozambique LNG. These are the projects that are facing some problems.
Yeah, too many projects, I think. But yeah, that would be a good way to go. And of course, we have the whole list of projects and we have our own risk index for all the projects that are vying for FID. The risk index looks at various factors like geopolitics, the size, the cost, and a bunch of other things as well. And it is going to be available in the LNG Forecaster. So if you wish to subscribe to it, you can go to our website drewry.co.uk and check out the details from there. I do see that there are a few more questions, but unfortunately we have run out of time. But we will make sure to answer those questions via email and get back to them. So I think this would be the end of it. On the screen, you have our email IDs. If you have any other doubts or queries or anything that you would like to appear on this space, please feel free to write to us. We will definitely look into it and try to make sure that we act upon it as well. So that was it from our side. I would like to thank all my attendees and subscribers for taking out the time and attending this webinar. I hope it has been fruitful for you, and I look forward to meeting you again. So, from behalf of Pratiksha, Shivam, and all others at Drewry, this is Aman thanking you and signing off. Take care. Bye bye.
Bye bye.